What's up, everyone? It's Karthik with MoneyVest. So wanted to do another live stream, a little bit of an emergency live stream because of the sell-off that we're witnessing here on the day. I mean, just take a look at this selling pressure. I mean, if you come over to the weekly candle, I mean, this is the S&P 500, right? So down a little bit over 4% right now on the week. And this was supposed to be a shorter week because Monday was a holiday. We had the Labor Day and it was a long weekend. So in 4 trading days, the market's S&P 500 have sold off a little bit over 4%. And if you take a look at the amount of liquidity that has come out of this market, what do you want to take a guess? Does anybody want to take a guess here? I'm gonna let more people join so that we can go over to the market concentration spreadsheet that we have. And I'm gonna let everybody take a guess of how much you think we are down for Magnificent 7 and the S&P 500. So I regret not looking. Asif is saying there's going to be a lot of people that don't want to open up their portfolios today, and I totally get that. I'm getting smoked on my NVIDIA puts as NVIDIA continues to sell off here. It's down a little bit over 4% right now, trading down to low $102 a share. And again, you already know that my put strike was 108, so we're way below that put strike, and it's most likely going to be closing in the money. It's down about 5% from those levels, unless we get a miracle towards the back half of the day and towards market close, which I doubt we're going to see one. But this right here is the NASDAQ. I mean, down a little bit over 2.3%. Now, if you thought that S&P 500 sell-off on the weekly was bad of 4%, take a look at the NASDAQ, right? So we got QQQs, 5.5% sell-off for this week, and this is once again playing into the September seasonality. We are off to the races. It's only been the first week of September, and we're down well over 4.5% to as much as 5.5% for the markets. So, quite an aggressive sell-off on the day, and of course on the week. Tuesday was brutal. Friday is brutal. Wednesday, Thursday was a little bit more flat, even after the jobs report that kind of hit a bit of a sweet spot, in my opinion. But I don't think that 50 basis points is going to happen. As JT is asking, do you think the Fed will cut 50 basis points? I don't think the market's selling off is any indication of what the Federal Reserve is going to do. I think the sell-off is very much to do with, profit taking, and investors want to rotate out of technologies and semis over to other parts of the market because they really want to protect their profits. So if you come over to the sector analysis, you'll notice that pretty much everything is down, but technology is the one that's down the most, right? So down a little bit over 2.5%, then QQQ is down over 2.3%. We got discretionaries down 1.7%. We got consumer staples or communication services down a little bit over 1.4%. And the sectors that are flat right now, staples, utilities, real estate, healthcare, right? Very, very flat on the day. So they're the ones that are actually outperforming the entire market. So we're really starting to see this rotation that has continued. There's been a lot of weakness, as I've pointed out in my previous updates and videos. There's been a lot of weakness for technology as investors have rotated out of those sectors into the more defensive parts of the market in anticipation of a potential recession. So it's really just market. What they're trying to do right now is preserve the profits they have generated from technology all the way through August. And this is nothing but a rotation in protection and preservation of those profits. And, staples and utilities is where the money's flown into. How's your NVIDIA put at 108, Timothy? So I'm actually in the money. As you already know, that my put strike is 108. Right now, NVIDIA is in the low 100s, $102. So I will most likely get shares assigned. And my strategy for next week is going to be selling calls against those shares. And we'll continue to sell puts and calls on NVIDIA. And we'll run the wheel strategy. I did that on Tesla, all summer. All summer, I did that on Tesla, was able to rake in a little bit over $17,000 in profits by running the wheel strategy on Tesla. Got rid of those shares when it was in the 230s, and it's now back in the 270s. So it's been really consolidating sideways. So that's going to be the plan for NVIDIA moving forward. Get those shares assigned and now move over to selling calls because, again, the premiums are pretty decent. However, if NVIDIA continues to sell off, the premiums are also going to diminish for calls moving forward. But, there's always going to be that opportunity for NVIDIA to trade sideways and for us to generate some nice income until, of course, those shares get called away at those prices. So Frank says, only nibbling, waiting for the seasonality to play out. Yes, I think it's really important to be careful and time this well because, as I mentioned, the next 4 to as much as 6 weeks are going to be pretty brutal for the markets, right? September seasonality is in full swing, right? We're seeing a pretty significant start to the September seasonality, and I think that it could get much worse from here because the S&P 500 is coming down to its support. So you'll notice that we are 5,400 is the level, and we're about 23 points away for the S&P 500, and QQQs have already broken down. So 454 was that level that we were talking, and we're already below that level. And from its recent highs from back on August 22nd, we're now down 7.5%. And now the NASDAQ 100 is back officially in a correction. We're back officially in a correction, everybody. The NASDAQ 100 back in a correction, down over 10% from its all-time highs. And so is the NASDAQ composite, right? So down a little bit over 10% from its all-time highs. And S&P 500 still, I think, well within a dip. So we are down about 4.6%. So the moment it is going to be over 5% down from its all-time highs, we're going to be in a bit of a pullback, right? So remember those market thresholds, as I've discussed that in my previous videos. Let me see if I can bring that over here very quickly. So I don't know if I have that spreadsheet. Let me just bring it over. It's called Max 7. So let's just plug that in. There we go. And there are the thresholds, right? So dip is anywhere between 0 and 5%. Pullback is 5 to 10%. Corrections 10 to 20%. And then anything over 20% to as much as 50% is considered a bit of a bear market. And a crash is well over 50%. So right now, as you already know, by the way, you can also take a look at this on our MoneyVest platform. So if you come over, take a look at the market snapshot, you can see the stocks that are in a correction / pullback / bear market. And again, the S&P 500, the NASDAQ, the Dow Jones, everything's going to be over here. And the NASDAQ, as I mentioned earlier, just entered into a correction down a little bit over 10% right now. So that's where we are. Now, when it comes to NVIDIA put, I wanted to really, make this sort of into a video. So I wanted to do a video about this, but I think it's a good learning lesson for us as well. If we are planning to, let's say, sell options for generating some income, right? So if we're planning to run the wheel. Now, the thing with selling options, I think that everybody needs to understand is that if you're looking at a delta of 0.2, right? 0.2 meaning 20% probability that that option expires in the money or out of the money whenever that expiration is. So let's say that I sold NVIDIA put at $108 strike last Friday, and NVIDIA at the time, if you come over to the weekly time frame, NVIDIA kind of closed out that week at around $119, right? So it was $119, $120, right? So significantly far out from the put strike of 108. So if you really take a look, NVIDIA had a 14% sell-off this week, right, from last week's close. That's how much it's down. It's down a little bit over 14.3%. Now, this right here is nothing but NVIDIA's weekly volatility, right? So if I reverse this to like this, what it's showing us is the bell curve, right? So this is the bell curve chart, right? So everybody who's taken statistics in school and college would understand that these are some of the more rare events, right, when it comes to the bell curve, right? These are the more extreme scenarios for whatever it is that you're looking at, whatever data that you're looking at. Now, if you take a look at what really happened, right, since NVIDIA is down over 14%, this week, we essentially were operating in this environment, right, where majority of those distributions, majority of those outcomes have been here. NVIDIA has been down anywhere from 8% to being up as much as 9%, because that's been the weekly volatility for S&P for NVIDIA in this case, and I've gone back several decades of data for NVIDIA. So it's been down anywhere from 8.85% to being up as much as 12.15%. So this event, this particular week, what we witnessed for NVIDIA in itself was a very, very rare event, right? Being down over 14%. So this right here is where we ended up operating for NVIDIA. Now, that's the thing with selling options, right? It's a realm of possibilities. It is a possibility. It's going to happen. So if you're selling options, expecting that you're never going to get assigned or you're never going to have your shares called away, then I think you need to rethink your strategy, because it's going to happen, right? Whatever can happen will eventually happen in the markets. So if it's a possibility, you have to account for that possibility. And did I expect it? Maybe not. I wasn't expecting a 15% sell-off in NVIDIA for this particular week. And this is not even an earnings week. Earnings week was last week, right? Last week was earnings week. It actually did not even drop all that much. And we had a very nice, cash good put kind of expiring out of the money. We made some nice 95 to 98% profit. For this week, not an earnings week, and yet it dropped over 14.5%. Also recording a single day biggest market cap loss in the history of the market for any company, right? So these anomalies will happen from time to time. And I think it's really important to take this lesson away that, even if you are expecting a very low probability outcome, it is still a potential outcome. It's still a possibility that can happen for any stock. So I think it's really important to always remember that when you're selling options, because there's always going to be that possibility. I've never met an options trader. I've never met anybody who's been selling options for a very long time that has never been assigned or has never had their shares called away, right? Because the probabilities that we're playing with are 80-20. 80% chance that it expires out of the money, 20% that it expires in the money. Okay, so coming back over to some of the comments here. So, Kat, do you see SPY 520? Let's just come over to this. And if you come over to the analysis, $520, oof, that's going to be a pretty steep sell-off. I think the first level of support, Frank, I would suggest that SPY needs to hold up is this 537 level. That's going to be a support level that we validated here from back in July. And if in any case we see a breakdown below this level, then there's possibility for us to come down to 526. That's going to be this higher low. So if you come over to the weekly time frame, that's going to be this sort of overall chart for S&P 500, right? So that's going to be for the SPY. And we've got 3 higher lows, 3 support levels that we're watching. The first one's going to be this right here. That's exactly where 526, 527 sits. If it does end up seeing a bigger breakdown, the next trend line is going to be over here. It's going to put us roughly in the low 500s and then possibly in the 490s if the sell-off continues and we actually enter into a bit of a bear market. Well, not really a bear market. It would still be a correction for the S&P down about 13%. A bear market would be 400s, which of course not everybody would like to see such a steep sell-off for the markets. Fair value for ASML. So you guys can actually do full analysis on individual stocks on our platform. I would highly recommend that you check it out because it's going to give you a full analysis. I mean, for example, ASML, we've got an M score of 3.88, so very, very high quality business. I've talked about this in our previous updates. I love that stock, love that company. So you can calculate it using multiple different valuation models. You've got a case analysis where you can plug in your own values, bear case, base case, bull case, discounted cash flows, discounted earnings. Everything is going to be available for you to access and all the data. And you can do a full comprehensive analysis on individual stocks. Maybe I can do my own analysis and share what the fair value is. Actually, ASML might actually be the part of the 37 stocks in ETF list in our Discord. So let me just take a quick look. Because I think I've done already the analysis on ASML as well. And if you come back here, we've got, let's see, I'm just going to zoom in. Long-term high quality, we actually don't, yes, we do have ASML on there with my fair value also included over there. So you can definitely check that out. There's 37 stocks in ETFs, so this is the entire sort of list. You can check it out. It's going to be under the Investing Alerts channel, where there's going to be 37 stocks in ETFs as part of the high quality long-term, short-term ETFs, leverage ETFs, tradable values, fair values, buy targets. Everything's going to be included over there. And that's what I mentioned, right? It's really, preparing yourself with a good shopping list, with a good sort of high quality list of high quality companies with buy targets so that you can take advantage when the time comes. And this is the time, right? This is the time to be taking advantage as volatility is pushing back up. So we're almost at 23 right now, 15% higher. And as the markets are selling off, there's absolutely no buyers. And, I actually mentioned this in our Discord earlier, which is going to be, quite problematic from a perspective of where we are in this market sell-off. I'll take a look at the MoneyVest Index here in just a minute, and I'll also go over where we are with this entire sell-off for Magnificent 7. Man, I'm going to have you guess how much we are down on the day, but this is what I mentioned in our Discord earlier. Basically said this right over here. So essentially said that this market reminds me a little bit of 2022. there is real weakness, with a lack of support or buyers. 2024 so far has been a very strong year. And so it's clear that investors, pretty much bigger investors, whales, institutions, are rotating out of semis and technology into utilities and staples, right? So that's where they're rotating into. As I mentioned before in our updates, where if you come over to XLK divided by XLU, there is significant underperformance for technologies relative to utilities. So this is a very clear indication that markets are rotating, right? So they're becoming very defensive, very, very defensive, because technology is really not performing as well. And we've seen this before. And you can make a case that there's more downside, and I would totally agree with you. I think there's more potential downside for technology because of the profits that we've seen for so many individual stocks doing really well. And for those reasons, they want to protect their profits, right? Institutional investors. And that being said, it's a great time for long-term investors, right? So if you are looking to accumulate and dollar cost average into strong, high-quality companies at discounted prices, these are usually the times when markets give us those opportunities. And as for options, be very careful. Be very careful when selling puts, as they can get in the money and you can get shares assigned to you, as I'm dealing with NVIDIA right now. But that's why it's important, very, very important, to emphasize on selling puts only on stocks you're okay holding for the long term. Very, very important, because you don't want to sell puts on shitty stocks trying to chase the premium. I've seen this happen with many people in the past, where they want to generate a higher premium and they would sell puts on stocks like Mara or Riot or even Peloton or Zoom or something like that, where they're not comfortable holding onto those shares for the long term, and they get assigned and they're like, what do I do? Like, I'm holding the bag. So it's really important to look at selling puts. If you're going to be selling puts, to sell puts on stocks you're comfortable holding for the long term. Warren Buffett sold puts on Coca-Cola. That's how he acquired those shares in the first place. Nice little premium, and since then it's done really well, because that's a company that he wanted to hold in the first place anyway. And my plan is likely to get this option expire in the money, get 600 shares, and then I will be looking at selling calls on my shares in NVIDIA. So that's where we are. No buyers, no absolute support here. So there's a real weakness in the markets, in my opinion, and this kind of reminds me of 2022 again. Are we going to see more lows? Are we going to see significant downside further? Of course, time will tell. I don't want to predict the markets, but I'll keep you guys posted with where we are with the risk and reward. I think that's really what it's going to come down to, is the risk and reward in the market. Volatility is still nowhere near close to the levels that we witnessed from back in August 5th on Monday during the blow up related to the yen carry trade, but we're definitely getting higher. And again, this is all part of the analysis that we had with respect to seasonality. Seasonality is what's playing a big role with September volatility increase with a median value of 20, average value of almost 25. That's what we're seeing in the VIX for this week. So coming over to some of the comments here. So when it comes to Google, I would wait. I mentioned this in the morning live stream as well. I would just be a little bit more patient. Although, I would argue that Google is coming down to another really strong support. There was a bear flag, which we identified in our market updates. I mentioned that this right here is the pole, a potential bear flag, and now we're seeing a bigger breakdown for Google further. So, you can make a case that 150s is a pretty good support for Google. But I would start with selling puts here on Google. It's down from its all-time highs a little bit over 20%. So we are now in a bear market for Google. It's now coming down to inside this green rectangle, very strong area of demand. So we'll see if there's any buyers that step in. If this selling pressure continues, next support is going to be down in the 120s. So, come over to our calculator, use it, figure out your fair value, see where you're comfortable buying it. It's down 20% already. So again, the valuations have come down. Support level in the 140s, 150s here inside this green rectangle. If it sells off more, that's better, right? When the price comes down, risk comes down with it. And when the price goes up, risk goes up as well. Okay, let's take a look. Simon, as an option seller, your mindset should be to sell puts to get paid to buy stocks cheaper and sell calls to get paid for selling stocks at a higher price. Absolutely agree. I think that's a very good way to put it. And do not fear assignment. Embrace it. Absolutely right. And that's the whole point, right? That's why we encourage people to sell options on stocks that you're comfortable holding for the long term, because you don't want to sell puts on a stock that you will regret holding throughout the course of that position, because then it really becomes kind of you're trying to get your way out of it. Like, you're going to be selling calls at strike prices that possibly could be below your cost basis if the price keeps going down and down and down. With NVIDIA, my plan would be to now not only sell calls next week, but also sell more puts at lower prices, because put premiums are also going to be much better for NVIDIA. And as we get closer and closer to my fair value, that's going to be the ideal goal, is to get to my fair value, which is going to be, again, in the 80s, which is still ways away from where we are right now. And Professor Demodran also mentioned, did a video earlier with his fair value in the $86, $87 range, which still represents about a 15 to 16%, pullback from where we are at the moment, right? So just under $102 for NVIDIA. Okay, MoneyVest Index. Let's take a look. By the way, first, let's go over to the sell-off. We right now, collectively for Magnificent 7, folks, are down over $358 billion. That is how much we are down for the Magnificent 7 stocks, and that is $358 billion. Wake me up when September ends. So 375 billion now, great, and 132 billion of that is coming from NVIDIA. Then we got Microsoft down 41 billion, Amazon 57 billion, Google 61 billion, Tesla 42 billion, and all in all, $375 billion. Quick guess here. Let's do it. How much is S&P 500 down on a dollar term basis? Let's see who's going to get that answer. 1.5% lower on the day. What do you think is the sell-off for S&P 500 companies combined? How much you think are we down on the day? How much you think we are down on the day for the S&P 500? And then we'll do a calculation on the week. Let's see. I want to see a lot of guesses, and then we'll calculate the MoneyVest Index. But let's see how much you think we're down on the S&P 500 here on the day. Let's get 800 billion. Let's see. Down about 1.5%, 5,400. 5,400 is actually a very, very important level of support. So keep that in mind. 0.6 trillion, so about 600 billion from Powell. Winnie says more than a trillion. John says trillion. We were down $1 trillion on Tuesday. So just over $1 trillion on Tuesday, we sold off. Coder says 55. What is that? 55 Coder, 55 billion, 550 billion. What is that? What is that number? Akbar says 2 billion. Come on, 2 billion's way too small. John, 2 trillion. I feel like that's a little too much. 750 billion. Come on, guys. I want to hear more people try to estimate or guess how much the S&P 500, all 500 companies are collectively down on the day. I can tell you that much. All sectors are down. All 11 sectors are in the red. But what is your guess to how much the S&P 500 is down on the day? So you have 550 billion, 2 trillion. Kevin says 669 billion. So let's take a look. Coming over to this spreadsheet, and we are down $722 billion. And almost half of that sell-off is coming from our very own Magnificent 7 companies. So that is about 52%. So 52% of the sell-off coming from Magnificent 7, but collectively we are down over $722 billion. Quite a few of you guys mentioned 700 billion. So that's very, very close. And that's how much we are down on the day. Let's take a look at if there's any companies that are actually moving higher. I'm sure there are. Let's take a look. We got Thermo Fisher, Procter & Gamble. Man, P&G, like this company has been doing incredibly well. Like Procter & Gamble is up on the day as well. 50 basis points. Oh, this is a stock. This is a clear indication of like recession-proof, defensive. Like this is where the markets want to be right now. Is Procter & Gamble. It's just another 0.5% higher when markets are just absolutely getting crushed. I mean, you've got, let's take a look at UNH. Tina mentions, 14 basis points. Even United Health is higher on the day. I'm assuming that's the second or third. Then we got McDonald's up, Danaher, CCL Industries, Johnson & Johnson. We got AbbVie, we got Merck, we got Chipotle, we got Zoetis. There's a lot of companies that are up from $1 billion, $1.5 billion. Philip Morris, AT&T, we got CVS Health, American Tower. So again, real estate, healthcare, staples. Those are the type of companies, those are the type of stocks that are up, while we have NVIDIA down 5%. right? We got Amazon, Google, Microsoft, and pretty much the entire market selling off. There's a few companies here that are, Tesla's down 6% now. Aggressive selling pressure. There seems to be no support, no buyers. We definitely 800 plus today. So yeah, we're gonna be 800 plus today, no doubt. Right now, 722 billion. I'm sure this is going to accelerate to a little bit over $800 billion. Max has sold 92 put for NVIDIA for 27 September. Do you think NVIDIA has more down in it? 92 put is way far out, way out of the money. Well, I guess not anymore because it's already low hundreds. So, $92 September 27. So we're looking at after inflation, after Fed, and that is going to be a potential downside of another 9.8%. It's possible. I mean, ideally, mentally, you want to be prepared for something like a 60-70% sell-off on NVIDIA from its all-time highs, considering that's what we have seen in the past for NVIDIA. So that's what you have to be prepared for because, in the past, like I said, we have seen pretty dramatic losses here, down over 22% here. This right here, during the entire 2022 bear market, it was down 67% from its all-time highs. This right here, from its all-time highs, down over 34%. And right now we're seeing some more brutal selling pressure for NVIDIA right now. Okay, TMF. Yes, we'll take a look at TMF and TLD here in just a minute. What is the real reason for the sell-off today? Data was okay. So, sometimes there doesn't have to be a reason. IoT, Frank says, is ripping. Let's take a quick look. We've got, Samsara up a little bit over 16%, also sucking out a lot of liquidity from other parts of the market. So pushing up very, very well. It doesn't have to be a reason sometimes. The financial media, like if you open CNBC, I'm sure they can come up with a reason, and because they have to come up with a headline on why the markets are selling off. But markets can do just as much damage with the lack of data than they can do with a lot of data. So if you come over to CNBC, on the front page, I'm sure you can see European stocks end the week down 2.5%, worse since early August. S&P 500 falls 1%. Friday heads for the worst week in a year on tech selling pressure. Weak jobs report. See, again, like weak jobs report, the Fed won't push the panic button and go for a jumbo rate cut, economist says. So, again, I don't think the jobs report was weak. I think if the jobs report was, again, pretty strong. But, like I said, mega cap tech stocks fall as investors continue dumping risk assets amid mounting growth fears. Amazon and Alphabet slumped more than 2%. Microsoft, Meta down 1% each. Broadcom shed 10%, so definitely accelerating to the downside. And semiconductors, falling in sympathy, like NVIDIA, AMD, Marvell, down 4% each. The semiconductor ETF down 4%. It's accelerated even further. So they just need a headline. Fresh August reports on the jobs further added to concerns of a slowing labor market. About a week labor data has sparked worries about the health of the economy, spooking markets, and denting risk appetite. Non-farm payrolls grew by 142,000 versus 161 expected by economists, and the unemployment rate edged lower to 4.2%. So August payroll data indicate risks are rising as the labor market is clearly softening and the Fed needs to step in to cut off the tail risks. The report seals the deal for a September rate cut, but the big question really is whether the Fed goes big by 50 basis points to get in front of rising risks, is what they also mentioned. So, again, I think overall the report was strong enough with unemployment kind of edging lower. But, most of the times they just need a reason. They really don't even need a reason. I think it's just straight up a case of profit taking because technology has done so well. They're trying to preserve profits and rotate into something more utilities and staples and something like that to take advantage of that. Because, if you come over to the weekly time frame for XLK, and let's take a look at how this is done. So what we'll do is we'll come over to, let's say, SMH divided by XLU Very simple chart. And since January of November 2024, this thing was up 57%, right? So if you are up from January through July in 6 months, you've accomplished 57% outperformance on SMH relative to utilities, right? So how much was it up? From January of 2024, all the way up to, I'm just going to come over to, no, this is SMH. Oh, SMH right here. Okay, here we go. So January of 2024 is right there. It was up over 72%, right? 72% from January all the way through July. And those are insane returns for semiconductors. If you come over to the FANG stocks, so let's just do, what is the best measure of FANG? Isn't there an ETF that tracks all the FANG stocks specifically? What's the name of that ETF? Does anybody know? I wanna take a look at how much collectively FANG stocks were up so far, going from January all the way through July. You can also take a look at XLK, but that's going to be technology altogether. But I really want to take a look at FANG stocks more specifically. You know what? We can actually take a look at this. Yes, MAGS is that indicator, but we can also take a look at this one, the one that we've created ourselves. Yeah, 38%, right? 38% outperformance all the way from January through July. Magnificent 7 from January 2024. FNG was leveraged, so it's not going to give us a clear idea. So January 2024 all the way through July, up 55%. So you've got SMH up 72%. You've got QQQs on the year from January 24 all the way through July, up a little bit over 26%. You've got MAGS, Magnificent 7, up 55%. So of course, big money institutions, whales are going to rotate out of those particular parts of the market. We've seen this story play out over and over and over again. This has happened so many times that it's kind of something that we have, already known for a very, very long time. What a sell-off this is! I mean, S&P 500 down over 1.6, Nasdaq 2.6, and we are in straight-up weakness mode. There are no buyers, no bidders whatsoever, and this is what the real concern is. This is what I also mentioned in the Tuesday's live stream and the Wednesday's market update, that there is real weakness. There is concerns because we're not seeing any buyers. There's no buyers present that want to take advantage of this sell-off. And I think it's going to take some time. And that's why it kind of reminds me a little bit of 2022. So now we're down $800 billion sell-off for the S&P 500. So here we are with a pretty steep sell-off, and Max 7, $409 billion. A lot of that coming from NVIDIA, $138 billion. We know from previous seasonality information that we see the markets start to go up towards the end of September. Do you think we could see the Max 7 reach their all-time highs once again before the end of the year? So actually, towards the end of September, things tend to get worse, believe it or not. Let me see if I can bring up the seasonality spreadsheet. I believe it's this one. So this is just looking at the September month as a whole, but I did one more analysis on the weekly seasonality for the markets. I forgot what the name of that spreadsheet is. Let me see if I can find it. But we took a look at earnings volatility, September. Because we looked at towards the last 2 weeks of September tends to be worse than what we have in the first couple weeks. So we're already starting off not on the best footing. There we go. I think weekly September. There we go. It might be this one. There we go. Boom. Perfect. So what we have here is nothing but an explanation of how September tends to be worse towards the back half of the month. That's why October ends up being the bottom, right? So October, most of the times October is the bottom for the market because September seasonality really picks up towards the back half of the month, and you'll notice that on average, even if you consider the probability, 57%, 53 to 57% probability, the markets are going to be lower in week 3 and week 4. Week 1 and week 2 was a little bit of a coin flip, really, and the average and median sell-off was actually pretty flat. So flat week. But we were down like 4 or 5% right now. So definitely quite an aggressive start to the downside. So we'll see what week 2, 3, 4 have in store for us. But yeah, week 3 and week 4 is when the brunt of the selling pressure really picks up for the market. And that's where we are. So that's why I think it's really important to have cash ready. Be ready for taking advantage of those opportunities, because volatility, going back up to over 23, that's kind of like a second spike that we're seeing, on par with median and average values is what we have seen in the past. Yeah, week 1 of September already so bad. Wall says, okay, that's it. I'm selling one NVDA 95 put. We'll see what happens next. Yeah, I mean, put premiums are going to be very, very high, very high. I actually sold a Tesla call yesterday, so that's doing well. So that's kind of like a silver lining on my Tesla position, because got a pretty decent premium, and then I was actually planning on selling more Tesla calls, but then I was like, you know what? It's just if my shares get called away, I'm not comfortable getting rid of those Tesla shares. The one that I sold, I was like, okay, even if I do get called away, that's fine, but that's why you have to be very careful. Sell calls also, very similar to when you sell puts. You should be selling puts on stocks that you're comfortable holding, them for the long term. You also sell calls on stocks and strikes where you're comfortable letting them go, right? Because if you let them go, you're obviously capping your upside, and so the premium that you're receiving, you should be comfortable with that, and also letting go of your shares. Because if you regret, you're like, oh man, should have picked a higher strike, or should not have sold that call in the first place, then you're really playing the game wrong psychologically. You should be okay. You should be comfortable with those scenarios, because when you're selling calls, is really no lose-lose situation. I mean, you're holding that stock in the first place. If your shares get called away, that's good. That's good capital profit, capital gains, also the premium that you receive. If not, then you keep the premium. So there's really no lose-lose situation unless you make it a lose-lose situation. That means if you're selling a call with a strike that's below your cost basis, then you're guaranteeing yourself a loss. So always sell a call with a strike price that's above your cost basis, and also be comfortable with letting your shares go if they're in the money. Okay, United PVP. So we covered that a little bit earlier. So why would the markets drop after such an ideal jobs report? So could be dropping for many different reasons. September seasonality is a big role to play. We got profit taking in full swing. Markets rotating out of technology, out of semiconductors, over to more stable, more defensive parts of the market like staples and utilities, healthcare. Those are the type of companies that are up on the day. So there's no particular reason. I know the financial media and maybe the other content creators may try to tie this with a reason, but sometimes markets do things that are just normal. I mean, this is normal. Like, this is normal profit taking, because we looked at SMH, we looked at MAGs, we looked at FANG stocks, Magnificent 7 stocks, and they were all up like 40, 50, 60, 70% from January all the way through July. So it's very normal to see a bit of a rotation out. Now, there may be still concerns that recession is on the horizon. There might still be elevated fears that, look, things are worsening. There's a lot of data points suggesting for weakness in the economy, and a recession is going to be there. Like, recession is going to be with us within the next 5 to 6 months. And I've also, talked about a lot of different spreadsheets where, on average, a recession has happened 5 to 6 months after the first rate cut, and the markets have topped about 4 to 5 months on average prior to a recession starting. So there's been a lot of different types of analysis that we've already done on the channel, a lot of data-driven analysis that are suggesting for a recession within 5 to 6 months. And I think I pointed to a date, February or March of 25, for when we officially get a signal for a recession. So in those scenarios, as we already know, the markets don't tend to do very well, because if a rate cut is accompanied with a recession, the bear markets are longer lasting, and they're also more severe. So with a recession, the sell-off is over 35 to 36% on average and median basis, lasting for 16 to 17 months. So a very, very long time frame for us to accumulate shares in dollar cost average, versus without a recession. So if it's a soft landing, only 6 to 7 months with an average sell-off, median sell-off of just over 20% in a bear market. So yes, TMF, TLT, sorry about that. Let's just go over that very quickly. So TLT, this is another area where markets are moving into. Again, flight to quality, flight to safety. That's what's happening here. So similar to what I showed you guys for XLK and XLU, this is S&P 500 divided by TLT, and this is the underperformance on equities relative to the bond market. Very similar to what we discussed for the XLK and XLU. So again, if this chart is going down, that is the underperformance in equities relative to the bond market. And that's just one of the ways the markets are once again rotating out of equities over to the bond market for safety while this uncertainty plays out. Folks, I want to remind everyone that we've got a little bit over 600 people watching. Make sure that you drop a like and subscribe to the channel if you haven't already. I would really appreciate that. These are all therapy sessions, streams that I do for all of you. So I would really appreciate if you just drop a like, subscribe to the channel if you haven't already. It really helps out the channel. And also recommend this to your friends and family, other traders, investors. You can simply just copy link and share it in your other groups. It would just greatly help us out in growing our community. And yeah, share, subscribe, like, help us out as we are live here to take a look at this market's brutal sell-off. There's absolutely no buyers. It's a repeat of Tuesday. Tuesday was a repeat. There's no buyers, no support whatsoever. And we are just seeing lower highs and lower lows. Lower lows. There's not even lower highs. There's just lower lows. Just lower lows. NEO is up. The defensive stonk. Yes, NEO is up, I think, 4 or 5%. 2020 scratchers, thank you so much. I really appreciate that donation. Best channel in YouTube, so thank you so much. That's a big compliment. I appreciate that. And we'll continue to strive to provide the highest quality content for you. There's never going to be any sponsorships where I literally get emails every day, from different brokerages and different platforms and different softwares, like, promote us, promote this, we'll give you this much money, that much money. I'm like, nope, nothing. Want to keep it very, very data-driven, market-related. So you'll never see me take a paid sponsorship on anything. Like, none of that FTX bullshit, none of that sponsorships on any brokerages or anything like that. So thank you so much. I really appreciate that. And how low do you think that QQQs can go? Let's come over to the technical breakdown for this on the QQQs. So what we have here is a nice little support breakdown below 454, and the next level to really be watching for the NASDAQ, for QQQ, is 433. I think that's the level where we are potentially headed down to. But there could also be a technical rebound or a little bit of a dead cat bounce before we get down to that level. So this, 434, 435 is going to be ideally the next support. But given how oversold we now are for the markets, there is a possibility for us to see a little bit of a technical rebound or just any dead cat bounce to push us to 454 again before we see that selling pressure accelerate back down. So, getting a little bit higher, and then of course selling off down to that 433 support would be a level for us to watch. Yes, paid sponsorships will always affect integrity, and I never want to do that. I've never done that and will never do that ever. August 5th still better to buy? Yes. I mean, August 5th was, a time when, of course, the markets were lower and volatility was much higher. So that was still a much better time to dollar cost average and buy into. But you never know. I mean, we might get a better opportunity if the markets are lower than the low from back in August 5th and volatility is higher from the high from back in August 5th. So there's always a possibility for us to go down further. But right now we're still in a correction for the NASDAQ, and S&P's well within a dip at the moment because we're still only down 5% from all-time highs. So Hugo says, I'm on vacation. All I'm getting is alerts of everything selling off, not stressed at all. Hugo, what are you doing on this live stream, man? If you're on vacation, just go enjoy. Go enjoy the beach, wherever you are. Go enjoy the good weather. Just don't worry about the markets. Markets will still be here after you're back from your vacation. And I think that's one of the most important things. If you are going to invest and trade and be a little bit more active, just please remember that your health comes first, okay? I've talked to a lot of people in the last several years, especially back in 2022, where people were losing sleep over an individual stock or an ETF or the market's coming down. You control how much to invest. So if it makes you uncomfortable, if it makes you lose sleep at night, pull back, right? You can always invest more, but you can't invest more and then be down and then start to come back, right? Pedal back. So you can always take it slow, build your confidence, because you're not just leveling up in terms of your growth when it comes to money, but you're also leveling up mentally, right? That's why a lot of lottery winners end up losing money, because they've never really learned how to manage that much money, right? It's not just about becoming sort of wealthy on paper, but it's also becoming wealthy like with a mentality of becoming wealthy, right? So being able to manage that much volatility and of course, capital and all that stuff. So take a step back. Your health is always more important than the markets. So this is his therapy. I can actually give pretty good therapy to a lot of people. Like, trust me, I can. I can talk for hours when it comes to psychology and when it comes to I like reading about all those things. I like reading, books on psychology or philosophy and those types of things, because it kind of helps us really understand the human mind. It's it's a quite an interesting area. Okay, let's see. Don't time the market. Yes, so absolutely don't time the market at all. VIX starting to rise again. Karthik, you were on stonks while you were on vacation? Yeah, but I also have to keep you guys updated, right? I also have to keep you guys updated. And to be honest, like if I'm not actually working, I would go crazy. Because it's just something that I love. I love doing it. I love reading. I love looking at the markets and reading and just doing all this. That's what keeps me going. Otherwise, I would hate to be on a beach drinking coconut water and not doing anything. Like that would be such a nightmare for me. So while I do enjoy my playtime, but I really, really want work time during the day. Like I really want it. Otherwise I'll just go crazy. I'll get frustrated. Honestly, I'll get really frustrated if I'm not working. Let's talk about Microsoft for Hassan a little bit. Ember says, I'm going on vacation next Tuesday, hoping for two things, either a good risk-reward situation or just a couple of green days. Well, hopefully we get that. But September, don't take a vacation. If you know seasonality, don't take a vacation in September. Take a vacation in November, because then when you're sipping on your wine or whiskey or whatever it is, you're seeing the markets rip higher and higher. It's just a better feeling. September, you're on vacation, you take a look at the portfolio, it's down like 8%. You're like, oh man, spending, and then your bill comes in. Sir, it's going to be whatever it is for the beer that you just had. So don't take a vacation in September. September seasonality is real. If you're going to take a vacation, go in November or December or January. But coming over to, let's say, Microsoft, continue to sell. So what Microsoft has is a little bit of a head and shoulders with the neckline in the 400s. So we're actually coming down to the right shoulder here. A very, very strong support in that area of demand for Microsoft. Microsoft, in fact, is one of the worst performing stocks in the Magnificent Seven. So if you actually come over to the spreadsheet that we had here for yesterday, so you'll notice that Microsoft is the only stock that is below all of its moving averages, although this chart is not updated from today. So Hugo says, now you tell me. So this chart is not updated for today, but after today, I'm assuming most of the companies are going to be below their 5, 9, 21 SMA. But Microsoft, up until yesterday, was one of the worst performing Magnificent Seven stocks, trading below all their moving averages. And Tesla was actually one of the best performing stocks, but now it's down over 6%. So I'm sure it is going to be down 5, 9, and 21 SMA as well. So we'll update this, but Microsoft definitely in a bit of a head and shoulders right now. So support level is going to stay roughly at about 400. That's the neckline for Microsoft. NVIDIA will get smashed today. Yes, that's what's happening right now. It's true, I'm only comfortable investing 10-15%, and that's completely fine. And, in our psychology course, we talk about don't do the most rational thing, do the most reasonable thing. Because in investing, everybody is wired differently. Everybody will approach investing differently. So what may make sense on paper may not make sense when it comes to that person. So don't do the most rational thing, do the most reasonable thing, which has also been discussed in the book Psychology of Money by Morgan Housel. Highly recommend you guys read it. It's going to change your life when it comes to how you look at money and investing, and it's just been incredible. Quoter says Meditations. Yes, Meditations by Marcus Aurelius. Love that book. I think I need to find more time to read more. I think it's just something that I really enjoy. I don't understand why the high-tech sell-off when inflation is coming down and interest rates are going to be coming down very soon. We have plenty of tech companies besting earnings. So, Kurt, I think it's really important to understand how sort of Wall Street thinks, right? They think on a yearly basis. They don't think about, NVDA, lots of potential, 5 years. Let me just go ahead and buy it. No, most institutional investors, most hedge funds, and the whales, the people that actually move the market, are only trying to beat the S&P 500. That's their only goal, because that allows them to create these amazing presentations and show it to their clients that, look, we beat the S&P 500. What does that do to them? Increases their assets under management, and they get paid a fee of their AUM, right? So if they're beating the S&P 500 consistently, right, over and over again, every single year, their performance is really good, they're getting paid more, right? That's what they care about. So while you're absolutely right, earnings are good, interest rates are coming down, you're seeing very strong inflation expectations to be coming down. So what this is going to do is, they took their profits for the year, rotated into staples and utilities. That's very defensive, right? That's a very defensive positioning overall. And when prices are lower for technology, guess what they're going to do? They're going to come back, start scooping shares once again, right? At these cheaper prices. Like if NVIDIA trades down to $90, they're going to start buying back in. If there's Tesla or Apple, Amazon, Google, a lot of these Magnificent Seven or chip stocks or technology in general, if they start trading down to really extremely low levels, we're talking 20, 30, 40, 50% lower, well, there's going to be support. There's going to be buyers stepping in, because there's always going to be that valuation support. I mean, at some point, right, as things get overvalued, things also get oversold, right? Things also get undervalued. And that's when they're going to start stepping back in. So as I've always mentioned, institutions and retail, there's always a big time discrepancy between these two groups of investors. Retail is playing for the long term, and institution is playing for the short term. And since institutional moves the market for the most part, as they move the market in the short term, retail can either get scared out of that market, or they can buy into that fear and benefit over the long term as institutional comes back in. So there's the big time discrepancy between those two groups of people. And retail is not the one that actually moves the market. It's institutions. And since they're the ones that are actually constantly rotating in and out, because they're very tactical, right? They want to be more active because that's what they're getting paid for. That's what they're going to do. They're just going to try to scare retail out, buy at cheaper prices, ride that wave back up, sell. It's the same cycle over and over again. So, but then of course you do have some institutions that are buy and hold, right? A lot of them are, like Warren Buffett, Bill Ackman. And so on an aggregate basis, markets tend to move higher as earnings continue to grow. So, JKL, thank you so much for that donation. I really appreciate that. NVIDIA daily short volatility has been huge over the past 2 weeks. Is that something you look at? And at some point, they will have to cover, right? Maybe 100-ish. So when I'm selling options, I really only look at delta and gamma. May look at theta from time to time, but really it's just a couple of those two Greeks. Implied volatility, maybe, but really when I'm selling options, it's the idea that, okay, I'll be comfortable at these strike prices for these many shares. So for NVIDIA, for example, if you come back, it is down quite aggressively, down about 5%. So I'm about $7 or about $6 in the money right now. So what I'll do is I'll have my shares get assigned to me. Next week, what I'm going to do is I'm going to sell more puts down possibly in the $90, $95 range, and then sell calls back up to 108. So I'll have a put at 95 or possibly 90, depending on where the premiums are, and then also calls up to 108. I also keep track of my adjusted basis because of all the premiums that I'm collecting. My cost basis is going to be lower. So right now it's sitting at 107.65. So for whatever premiums I collect from the calls, it's going to drop down to 106. And then the more puts that I'm selling, it's going to drop down to 105. And that's really going to be the wheel strategy that I'll continue to run that I did on Tesla as well all summer. So that's going to be the idea. And let's see. Guys, I'm going to take off for dinner now. Thank you so much for joining, everyone. We'll come back for the market close. All I'm asking in return, wow, markets here down 2%, 2.6. There's no low, there's no support. S&P 500 still making a new low of day. 54.10. We just made a new low of day. Who's the workaholic now? No, I don't consider this work. Otherwise, I wouldn't be live at like 2 a.m. or 1 a.m. Like, I love doing this. I enjoy it. So, just stay on DoorDash. Yeah, well, that's what I'm gonna do. I'm not cooking right now. I'm gonna order food. You guys don't want to see me eat food. I'm gonna put on some Office, enjoy myself a nice quesadilla, some Mexican food, and then I just came back from a workout, by the way. So, and I was looking at the markets. I was like, no way, I gotta go live after. So, but this week's been a pretty insane red candle here. Get operational falafel. Oh my God, Milan, you and your love for Operation Falafel. This guy, every time he's in Dubai, let's go to Operation Falafel. Man, there's better places. Trust me, there's better places. I know you love. So what exactly do you love in Operation Falafel? Do you like shawarma, Milan? Is that why you love Operation Falafel? Because there's better spots for shawarma. I come to Dubai just for Operation Falafel. I know you do. You specifically pick a layover in Dubai just for Operation Falafel. So I have no idea how to do put options, put in options. Have a good weekend, Southampton, New York. So you can definitely learn. I would encourage everyone to learn how to sell options, because that can, over the long term, be a very good strategy for generating income. Yeah, next time you're here, we're going to a different restaurant. We're not going to Operation Falafel. You've already been there like 3 times. This is what Milan does. I think we discussed it last time, right? You were telling your wife, like, yeah, I'm just going to go grab dinner. I'm just going to go to Operation Falafel. And they live in New York, New Jersey, by the way. Operation Falafel, like for me going out, getting groceries, for Milan, it's like Operation Falafel. Yeah, take a quick flight to Dubai, get Operation Falafel, and then just come back. Do they have it at the airport? They might. I think they do. I don't know. I don't know if they have at the Dubai International Airport. Okay. Yes, in Dubai. Where do you say what country? So in the UAE. So Kurt, I'm thinking I'm long. I don't retire for another 10, 12 years. I'll buy and hold the dips. I'm just gut-wrenching to witness the value of my portfolio plummet. And that's part of investing. I think everyone, if you're investing, I think it's very normal to see that. But also remember that as you are growing, what used to be your entire portfolio value at some point is going to be the daily swing in your portfolio. And that's when it's going to hit you. That's when you're going to realize, like, wow, what used to be my entire portfolio is now what I'm experiencing on a daily basis in terms of gains and losses, right? So there's always a perspective to things. And so if you are consistent enough, if you're disciplined enough, if you're patient enough, the markets will reward you. And that's the whole point, investing in high quality, good quality businesses over the long term, and then just sticking to the plan, trusting the process. So VIX is high, it's time to buy. Let's take a look. We are at 23.5. Ashraf, I'll update everybody on where we end up being for the day. And also the MoneyVest index, right? So we actually did not calculate the MoneyVest index. Yesterday we were at 3.61. So this is where we were as of yesterday. So I will calculate this for all of you right now live. And then take a look. So yesterday we were at 3.61, 3.62, around that number. Let's see. Yeah, so the lower the money invest index goes, I think the better it is for us, because that's when the risk reward actually tends to be very, very good for the market. So we're at 3.44 for the money invest index right now, which is coming back down to the yellow band. So we are right about here. So we are 3.44 will put us. This one will get updated as soon as the markets close, but we are somewhere here. 3.4 is going to be right there. So this is where we are. We're back in the yellow band. We're nowhere near close to where we were back on Monday, August 5th. That was right about 3. And pre-market we were even lower, 2.95. So that's going to be that support level to keep in mind. Yeah, they do have an Abu Dhabi airport. Yep. Qatar is Qatar is Doha. Etihad. Etihad is the airlines that flies out of Abu Dhabi airport, and then Emirates sits mostly for Dubai. Anyway, so thank you so much for joining, everyone. Really appreciate you all. There doesn't seem to be. Yes, I'm leaving now, Coder. Okay. I'm leaving now. So, okay, thank you so much for joining, everyone. Really appreciate it. Make sure you drop a like and subscribe to the channel. Again, for all the people that are joining us for the first time, we cover fundamentals, technicals, macros, options, swing trading, long-term investing, everything on the channel. So make sure that you do check us out with the link down below. Love to have you on board. 16% annual discount available until the end of this month. And as always, happy investing, everyone. I will see you all. I almost have 100 shares of SPY. How far out do you typically sell your covered calls? 2 weeks. So I'm doing weekly calls and puts as well, but you can go out as much as 2 weeks, 3 weeks, but not more than like 30 days. Maybe in 45 days in certain circumstances, but less than 30 to 45 days. And I personally am selling right now weeklies. Thank you so much. Happy investing.